what I have not covered in a long time are my other holdings, everything I hold other than gold and silver stocks. So I do have some other resource stocks, not too many, but also some other blue chips and maybe some small caps. But I'm just going to cover everything. Now, since these are following the markets more than the metals, okay, besides the oil and the gas stock that I hold, I'll get to that. But I do want to cover very quickly the market. So S&P, we've had this crazy rally. I feel like we've reached the top of this bear market rally. It's been unprecedented, a bit like the bull market for the last 2 decades. So I think it makes sense. You've had a bit of AI craze. You've had a bit of money pumped in from this bank failure. I think we're done. I think we've got the head, and now I'm going to create the shoulder. S&P, we are bouncing on this horizontal. I've covered this in the last video, at least the last recap, video. And I think we're going to create a second shoulder and then flush. So that's the S&P, the Nasdaq. We've already started to flush, and we're in the early innings of creating the right shoulder. I think we'll come down to 358, 358, 360, create the right shoulder and flush. I do think that with interest rates going up, we're going to have a bit of a banking crisis, and that will definitely accelerate the move to the downside. Dow Jones, okay, it's had a late rally. It's trying to hold on. It's convinced it can keep going, but I think it's just got to the party a bit too late. So back down we go. And to be honest, if the whole market start to flush, then down we go. Basically down we go. And I think it will surprise quite a lot of people how fast we go down. It has surprised me how much we've moved up, I have to admit, but I think it's time to rock the boat in the other direction. So Russell's come back down to this horizontal already. Here's your little head. I don't even know if we're going to get a head and shoulders. I think we'll just bounce on this ascending and then flush. In the end, it will be a head and shoulders for everyone, to be honest, but maybe not the Dow because it's a different sort of pattern. But I think we're going lower. Now, before I go straight to my portfolio, I want to cover the major stocks, the Magnificent Seven. I think I've got them all. If I miss them, it doesn't matter. Apple, right? This has been pretty much the big defensive name that, I mean, look, it made new highs. It's ridiculous. Who's going to buy phones in the middle of a depression? Well, apparently everyone. But we've had this big move up into earnings. Bam. Straight back down again. No point in drawing this ascending line. My goodness me. Down we go. Now we've got to this horizontal. Obviously, we're finding a bit of support. And if we go back down again, to be honest, the next real support, even though Apple is probably going to get bought quite often on the way down, little mini pit stops, maybe this one here, 170, big round numbers. I think we're going to come back down to this descending breakout. That'll be the next major support. But, I'm not going to go through Apple too much in detail. It's just as a sort of general barometer for the markets, you could say we might have a bit of support in the markets because Apple has support, but it depends on all, not just these Magnificent Sevens, but all the other stocks. But these obviously do make up a large part of the general markets. Now, let's be honest, Apple is at support. I think we bounce a little bit, but I don't think we can count on a new high. That's kind of ridiculous. And this drop's been pretty crazy based on earnings, I believe. And so I think we're gonna have a bounce and then a move back down again to this descending support. That should help some key technical bearish patterns in some of the major markets like the Nasdaq. Microsoft, look at this pop all the way up here, and now we're below this consolidation zone. For me, I think we enter this sort of channel here. There's no very obvious support. Maybe the one down here, 300 actually, psychological. Otherwise, I think the major support is the next horizontal. So it's not going to get there in one go. Microsoft's a big stock. We may even rally with Apple, 1 or 2 days, but I do think we're going to go back down again. It's been a huge rally, and I don't think it's warranted. So there's Microsoft. I think we've got a bit more downside to that. Meta, unbelievable. I used to own this all the way down here, really under 100. Sold it at just under 120, I think. I forgot, but really small in and out. And look what happened. But anyway, can't be too mad. Money is money. Now, I think we started to close below this ascending for the first time. Clearly, down we go. How far down do we go? Honestly, I'm not sure. It probably depends on the other markets. See when the Nasdaq finds support. If you really want to buy, I would not be buying this. I think we need to come down a lot in all the tech stocks. Meta, you know, I think it belongs at least in the low 200s. So, but I'm not looking at Meta. I don't own Meta. It's just another example of a big Magnificent Seven which has lost technical support. Google. Okay, this one hasn't gone up as much as the others. Late pop, some AI craze to it. Obviously, Google is a massive company. It's not really lost support, but I have to cover it anyway. I mean, I just don't see it going higher. Sorry. Nice gap up here, but I think we're going to close the gap back down to 123, and then who knows, maybe back down to under 120. I don't know. It's a little all over the place. It's not exactly bearish, but you know, maybe a gap fill at least. Netflix. Yeah, this support here. Let's see if we can close below 110 and then straight back to 383. And then maybe we have to start extending this ascending to see where the next support would be. And again, if we start to close below this ascending, straight back down to lower numbers. So Netflix, I think another example of a stock that's not going to go higher. You know, their new numbers, canceling people's subscriptions or whatever, people who've been duplicating others. Tesla, look at that big move straight to the descending, touches it, back down we go. Okay, little bounce here, but you know, if the market starts to move lower, straight back down to this 220 zone, and then who knows, maybe even lower. And okay, the others I'm not really going to follow. AMD, to be honest, I would follow Nvidia. I would show Nvidia now more than AMD. It's just I'm short Nvidia. Anyway, these are some of the big boys that make up the Nasdaq, and to be honest, the S&P and the others. I think the point is they are done with the highs. That's my point in the general markets and in those Magnificent Sevens. Let me finally get to my actual portfolio. Now, I'm not going to cover the gold and silver stocks because I've covered them already. Let's start with the mini oil stock, Prospera Energy. This is actually quite good. So I bought it recently. I think it's 0.95 actually, not 0.9. And it's had a crazy move. I don't know if there was any news or it was just some of the interviews they did, but nice move. It's kind of up 50% from its lows, or at least the lows I bought it at. I think I bought it at 9 then. But okay, whatever, 9 and 9.5. I'm definitely in the money. Taking out this descending now. It's an oil stock. Oil obviously has had a nice run from the, where is it, the mid 60s or high 60s or something to the 80s. Now we're at 84. So beautiful, beautiful move. I personally think oil is due for a correction, but so far it has not closed below its descending. So it looks like it wants to keep going up to 93, but I still think it will correct, go back down to the 70s. But this would explain why Prospera Energy has gone up. Some good interviews. I'm not sure if they've had news out recently, but with oil climbing, then this makes sense. To be honest, if you zoom out, you can see my technicals, very simple stuff. You know, we closed above the descending. Maybe now a small retracement, little sideways action, but back to the highs, 0.175. And then who knows, as you zoom out, you start to see what's possible. Next major resistance, maybe 30 cents, maybe higher. I think that will take oil going up a lot more for that to happen, but definitely resistance here at the 0.175. So very happy with PEI. Now, this is the US version of it. Normally I buy the US stocks, but for some reason, I'm unable to find this one in Interactive Brokers. So I'm just keeping it up there in case it does appear all of a sudden. But for now, PEI is what I'm in. Very happy with that. Now, gas. Natural gas is hard for me to trade. I'm not really allowed to buy US ETFs, so I've had to resort to some London ETFs. Now, gas is great. I'm pretty much in the money finally on this one. Gas looks good. Should run to $4, maybe more. But I'm in this ETF, so I do have to pay attention to the ETF. One bad thing about ETFs in general, especially ones like this, go on, zoom out. If I was to keep zooming out, look at this. This is total fraud. This is just what you call decay. ETFs that just, the cost of having the ETF is priced into the ETF. So these have to be short to medium term investments. You can't hold them long. And I'm in oil for the long term. And I actually didn't realize that this ETF was one of those decaying ones. I used to own TVIX, TVIX. That was really the worst. I mean, the VIX is already broken, but TVIX, forget about it. I mean, this is TVIX is supposed to be 2 or 3 times the VIX, but you'd have days where the VIX was up more. I mean, there was so much decay and fraud in that. I think Credit Suisse was involved in that ETF, so good riddance to Credit Suisse, just on that basis. But this one, to be honest, I'm still happy holding it because I think we can still squeeze. I don't think there'll be too much decay between now and the time it squeezes towards $4 or $5. I'm not going to natural gas. I'm not going to go to oil. I cover that on a daily basis. But I think we're going to move higher. So I'm very happy with this. Little retracement, made a new high. So I just think we're just going to go sideways and then back up quite quickly and scream up, at which point I'm going to try and close my position. Now, I'm not going to close all my position here. I think we could have a little bit of a squeeze. But if we do start to have a squeeze, I'm going to be closing my position because this is not the way I want to have exposure to gas. Now, I do have, so I'm done with NGAS. You know, I think we're going to go higher, and you can see the resistance points. To be honest, if we do even start to take this out, next resistance, I don't know if prior support here, you know, should become resistance. But if we do go higher, I'll at least have this. I'll be all out by then, that's for sure. Even though people think it can go back to $10, which should be around here for NGAS, knowing this ETF, I don't expect that. The other way I'm trading gas is through Trillium Energy. Here's the Canadian ticker. Now, I'm in the US stock, but there's less history to the chart. So I actually watch TCF to judge what I'm going to do with TRLEF. This is a fantastic stock, in my opinion. It's got a lot of potential. It's seriously undervalued. Now, a lot of things out there are undervalued, but this one, trust me, is seriously undervalued. I think this deserves to be, and there used to be another ticker, by the way, which would show even more history. This used to be at $1, $2, $3 or something. This one belongs in the way above 1. So, you know, it's here at 33 cents. And I'm talking $1. So actually it's at 24 cents. This one has serious potential and it just gets sold off on news. I don't know what it is, but at one point it will be correctly reflected. It's a gas play primarily, but actually they've just recently started to get exposure to some oil. And I think they've made great acquisitions, or whatever they've done over there. They've done a great job. So this one, you know, I hold a decent amount in it. So I'm not buying anymore now. If we come back down to this support zone, I'm not even sure I'll buy it. But if we flush for any reason, even if it's bad news, just the amount of good news behind this stock, I don't even think that would put me off buying more. But I think if we do get down to this 17-cent range in the Canadian stock, I would probably buy more, whatever that equates to here in TRLEF, probably all the way back down to 16 cents. Definitely buy more. I have complete faith in the CEO. I would really recommend you look this one up. This is a beast. So that's Trillium, just sort of sideways, but I expect to pop any moment, especially with gas and oil going up. Okay, now HIVE. This is the crypto miner I've decided to get exposure to. To be honest, I should spread my crypto exposure to different mines, not just HIVE, but maybe Bitfarm, Hut8, Riot, Mara, spread it out between all 5. They look pretty well established. I don't think they're going to zero. But HIVE's done a good job. You know, it's moved up nicely with the rest of the miners and the Bitcoin market. Now, this pop was beautiful, sold into it the way I always sell into it. Every time I see some little resistance, I'll sell. I probably had resistance here just from looking at the past area. I remove the lines when they become obsolete just to clear the chart. But so you see, basically the only lines you should see on all my charts are the ones that are still relevant in my opinion. But yeah, I had a nice pop, machine gun my way out of it. I probably sold this gap a little bit, boom, boom. Maybe here, 650. Maybe I dropped the $7 sell, which normally I have at $6.99 or $6.89. If I saw it, I probably dropped it. I forgot, but I sold this entire pop. But I did not buy the drop. Why did I not buy the drop? Because I was of the opinion, as it was dropping, that Bitcoin would drop a lot more. Now, Bitcoin's done quite well recently, bouncing off 28,500. Also because of the bank downgrade. So whenever the banks have problems, Bitcoin love it. Bitcoin loves it and seems to pop. I do think, though, that interest rates go up, markets come down, banks go down. Don't know if Bitcoin will go up just because the banks are going down, though. I think this will be a general market route, and I think HIVE, the crypto miners, and Bitcoin itself will go down with the markets when push comes to shove. That's why I haven't, even though, look at this beautiful retracement back down to prior resistance acting as support, especially on this day here. I would normally buy at least what I sold up here. I still haven't. I'm being greedy on the downside. I think we can come down at more. 350, even 350, I might nibble my first small amount, just expecting it to keep coming all the way back down, just because of how much I think the markets and Bitcoin will come back down. But that's me being greedy. Otherwise, I do hold a little bit. I mean, decent amount, so that if we do squeeze and I got it completely wrong and Bitcoin goes to 60,000, I make a lot of money. So, enough to make decent money if I'm completely wrong. But if I'm completely right, I definitely save a lot of ammunition for some low prices. Okay, Amazon. I hate this. Amazon, I bought this absolute low, a bit like Meta, except Amazon didn't rally as much. Now it's rallied a decent amount, nowhere near as much as Meta. But the point is, I bought it very perfectly down here, expecting it to go lower. It was my first buy, very soft entry. I mean, it's worth like a third or a quarter of HIVE, and I thought it was going to come down, and then I was going to start buying my first decent amount. And then it just went up, and I never bought, never added on any retracement. So I own very little. It's a good stock, obviously. Amazon, big company, good company. It's going to last. It'll probably start mining things in space soon. So that's one you want to give to your grandkids. I just got greedy and I regret it. If it comes back down again, let's see. I think all the markets will come back down again. I think Amazon, follows the Nasdaq and is part of the Magnificent Seven. And I think it will come back down. I hope it does. And I will add to this one before we get to this area, because I want it to be one of the big boys that I own for the next couple of years. I think I can get it back down near 100, let's say, at least. But if this bear market really returns and we make new lows, I really hope that's the case, because you could get Amazon very cheap. So I'm unhappy with this decent move. But again, I think a lot of the stocks will come back down again. BHP, this one is a monster in the resource industry. The dividends is incredible. I think it's 8 or 9%. So you can see the stock has hardly come down as much as other stocks. The bounce has been okay. It's in the middle of the channel. I own a decent amount, but I really want it to flush. And this is more likely to flush back down to this 47 level than the major stocks like Amazon, because I mean, with the dollar going up and if markets come down, you can imagine resource stocks coming down. Even though, mining copper and doing what it does, BHP, the exposure it has, it belongs long-term really high. So I believe in it. I just think there's a decent chance that it comes back down at least to this 48 range, possibly even lower, back down to this ascending support. There I will buy pretty aggressively. I want BHP and Amazon to become very strong holdings, like tier 1 holdings, as much as I hold in Agnico Eagle, Barrick Gold, Newmont, same value. And at the moment, I have that type of value in Trillium. That's how much I believe in Trillium, by the way. Whereas Prospera is about $500 billion, even after the pop. Okay, Alibaba, very similar to Amazon. This one, I haven't really looked at these charts too much recently. So it's funny, I see all these trend lines. They're my old trend lines, but they're okay. Yeah, middle of the range, just incapable of really holding above 100. If the market comes down, which I believe, Alibaba, even though it's got some great news, it's in China, I think it'll still come down with the Nasdaq. So once we close below this ascending, down we go, maybe fill this gap. Then we have a little bounce because we're at general support. And let's see, it depends on the markets. But Alibaba, unlike a lot of the other stocks, is very low. We're not near all-time highs, right? Remember Apple and Microsoft, all that ridiculous stuff. So Alibaba, I also want it to become a tier 1 holding. I've got a decent amount. I got about half the value I want it to end up having. So if it starts to pop, it starts to be worth quite a lot quite quickly, and I don't mind. But if it comes back down again, it loses a bit of value, and then I can pretty much double it, and then it's worth a lot. And at all-time lows of $60, that would be great. So Alibaba, I don't really mind what happens. In fact, to be honest, I'm pretty comfortable with all of them, all my stocks I'm holding, including the ones I haven't gotten to yet, except Amazon. Definitely not worth enough. but all the others are worth the correct amount that I'm happy with at the moment. Okay, now we're going to go to my 3D printing stocks. Okay, now these are these three DDD, NNDM, and DM. They are the 3D stocks that and again, I don't follow news too much. I don't look at balance sheets. I look at generally the stocks in the sector that are well known, well established, and won't go bankrupt. And then I look at their charts. Now, you see these two stocks down here, Rio Tinto and SSYS. These are stocks I don't own. It ends at Nvidia. They're just ones that I'm watching so closely that I actually added it to my portfolio. Now, I say that because SSYS, Stratasys, is also a 3D printing stock, which I may want to add, and that's simply because it's come down a lot. I don't think it's as good as the ones that I'm holding. It's just, there's this merger fight going on between these four. SSYS, DDD, NNDM, DM. It's just absolute drama. It's hilarious. I don't follow it all, but I see all the comments and I see the news releases. They're just, trying to buy each other out, and then these tender offers get rejected and hilarious stuff. Now, DDD, this one's been around for a long time. Look at the stock price. Look at the chart. Beautiful stuff. When you have a squeeze, you're a millionaire the next day. That's definitely possible. Now, this is a real company with real earnings, with real products, etc. It's come all the way back down. It's at absolute lows. Now, if I zoom out, it does go lower in the past. But, I think if this can weather the storm, the bear market and the recession, depression, whatever, 3.5 years from now, we're above 20, we're going to 30, or maybe we're already at 40. That's what I expect, which means I can retire. It's one of those up several 100%. This is one of the big boys. This is probably the biggest one in the 3D printing world. By the way, I think 3D printing is more important than AI. If you can literally print things out of thin air, like a central bank, but real things, spare parts, or you can self-generate in space. I mean, this is just the value. Okay, AI is also very impressive, but AI has also been around for a while. So I don't know. I just really believe 3D printing can make a massive return and I can make lots of money. That's why I'm in it. So here you can see we're at absolute support. I've got a decent amount in this. If it goes lower, I will lose value. I'll lose maybe a third, and then I can double my value at absolute lows. As long as it doesn't go bankrupt, at that point, I might start watching more the balance sheets. But I know how to trade out of positions, and I don't think it comes out of left field. So DDD, absolute support. What I got to ask myself is what happens if the market crashes? And it should go lower. But I think if it goes lower because the general market's crashing, not because there's something wrong with the company, that's just a gift, because look how destroyed it already is. NNDM, I think this is the best 3D printing stock that exists. You wouldn't think so by looking at the chart, but it hasn't come down as much as the others. It's really had nice moves. That's because of the cash on hand it's got, the acquisitions it's trying to make. And I mean, look, if this comes back down again, it's a good company. It's coming down because of the sector, or because rather the market's fantastic buy. This one I will add to. This one I will make my heaviest holdings in the 3D world. Really believe in it. DM, this one is a more dodgy one. I don't believe in this company. I just feel like it's got little pops that it can make, and we're at absolute lows. It can go lower, of course. I think it will. This one's worth less than half of these two. These are both worth double. So that's how much I don't believe in DM. It's really these two that I hold. But this one, again, it can make nice little pops, and it's quite easy to trade. And to be honest, I really lost a decent amount of money holding it down here, but then I started to trade it, and I don't know if I'm even because I've traded it so much, but now the value is a lot less. I've made good money on these trades, and I just want to continue trading it. If it has a crazy pop, I'll be all out, but I think it's got some potential. So there's the support. I think it can go a bit lower. The market drops down here, down there. After that, there's no level, so you'd have to wait for it to create a level, let's say, but I don't have too much in it, so I'm not too worried. Let me look at SSYS since I'm looking at the 3D. Again, zoom out. They've all got very similar charts. They had crazy runs back in the day. Then they had a recent pop in the 2000. This is the Corona time. No, I don't think it is. That was March 2020. Whatever, had a crazy pop with all the rest of the sector. and it's just completely come back down. Now this one is a bit like DM. I don't believe in it. I think it's a hard time making money. And there's some drama. The board is just horrible. They just want to keep making their money rather than the shareholders' money. But look at this gap fill right on support, dropped 30%. That's what that was there for. That was justifying my reason to buy it. I think I can make a little, 20% popping out. So this one I may buy, and then I've got all four, all four that are part of the same drama. So I'm kind of hedged one way or another. Okay, Paramount. Paramount, one of the big names that I own. I owned it initially on, was it this drop here or that drop there? Started to lose money as it kept going down, then started to trade very well. Pretty much made money on it. I'm quite sure. Again, I don't follow, and I don't even want to know, oh, am I technically down on it? Therefore, I have to hold it. It starts to interfere with your trades. Let's say your neutrality behind the trades. But really good trading around this period, all out before this drop, and then just trading this little range here. Started another small position. I expect it to go lower. I want it to go lower. If the Nasdaq goes down, this will go back down. I think I got a 1401 buy, which will fill, and then it'll go lower. No problem. I want to buy it down here, $10. After that, don't know, don't really care. If it doesn't go bankrupt, it should bounce hard. I'm talking about 100% easy. So that's what I'm looking for. I'm looking to buy and create a strong position at the absolute lows. I think a lot of people have lost a lot of money all the way down here, but I'm looking to basically consolidate and buy a larger amount at absolute lows. So I look forward to Paramount flushing. If it goes up, then I'll just sell the mediocre position I have in absolute profit, close the position, goodbye, hold cash, collect my 5%, and wait for other stocks, because there are lots of stocks that are very cheap, and I think the market's going to go lower. Crispr, this one here is a biotech. I never owned biotech, but this one here, I heard decent things about it. Again, I hate biotech, but look at this chart. Pops decently. I think it's the best one out of the 10 or so names that I've heard of. And I've already traded it very well. Bought it low because I don't really care. So when I came back down, I bought it, made good money here, traded it a little bit here, bought a little bit the other day, and then it immediately popped. I sold only a third of what I bought down here. Now we're back down. I'm not going to rebuy what I sold because I sold only a third, so I've still got 2/3 of that. But also, if the Nasdaq drops, we could have a little flush here and then back to the major ascending, where I will rebuy what I sold. And then if we start to flush this one, this company, I don't think has any money problems. It's just going down because of the markets. This, it's the kind of company where all of a sudden they release some news, some good news, and it's just absolutely screaming. I think there's some real value in this technology that a lot of people in the biotech sector know about. So this one is very, very good. That's why I own it. Otherwise, I would never own it. Zoom, one of the well-known stocks right now, absolutely at its lows. There's a collection of stocks like this that are really all the way back down to their Corona lows. Now, Zoom made a lot of money from the Corona times. Look at this move up. And now they got more money than back then, but we're trading all the way down here. I don't care how bad your industry is or your company is. If you come back down this much, you're due for a bounce. I think Zoom was going to bounce. It's just the markets just was done topping. So now we're back down here. I have a decent amount in this, sort of half of what I really want in the end. I just don't know. We're trading at the absolute lows. Yes, we can go lower. We can go to 60, which is, 10% drop from here is absolutely nothing. It's like zero if you consider how much it's dropped and how much it can go up. So I'm pretty much owning at the lows, half the amount I want. It's because, these types of names, the ones that are being crushed, they're the ones that get crushed when the market goes back down again. So I just fear that it can go lower. And that's when I want to double my position. And then I think I can make good money very easily. But even where it is, it's due for a pop. So I'm just happy owning it. I don't think it'll go bankrupt. I think it's got a good, I'm using Zoom right now. I use it quite a lot actually. And as long as it's not going bankrupt, it's due for a massive pop. So I'm happy with Zoom, but very, very aware that it can go lower with the market dropping and given where it is technically now. Okay, now I'm covering the absolute small cap trash that I own, Oatley. Don't ask me why. It was on my scanner a long time ago, going down before the bear market, got absolutely annihilated. Decent bounce. I traded it well. I think I'm in the money, actually. Own very little. These two here own very little now. Bought it already just a few days ago on this curl. I think it can go up even if the market goes down. Absolutely demolished, value crushed. It has a real product, you know, it's that milk company. I buy one every Saturday morning just to help the stock price. I actually buy one of their milk cartons, even though I usually buy a different one. But yeah, I think this can pop, you know, go back up to this level here, 180, maybe gap fill, even if the market's going down. If it starts to go down the market, to be honest, there's no support after 130. So I'd have to wait for it to stop going down, curl, go back up, you know, do the usual stuff. But that's Oatley. Mind Medicine, this is a mushroom company. I used to be in the Tilray and all that. I closed those positions, even though Tilray's had a beautiful move the last few days, I noticed. But that was a long time ago that I closed it. But this one here is one I kept, and then I got crushed on the way down, rebought the position, traded very well here. I think I took overall a loss on it, but maybe not actually, because you know it's so cheap that you're buying small amounts, but it's, you know, a couple hundred shares here and there. If you're trading it, you're making, you know, almost 100 profit each time, each in and out swing, and in the end, it might make up for the losses over here. I don't know. I don't really care. It's small stuff. These two are actually small. Now, it was ready to pop and squeeze, but the market interfered, and you know, there's resistance at 5. I mean, I don't need to draw this line. It's very obvious to me. I know the stock quite well. Even though I hold loads of positions, I pretty much am very familiar with all of them. We've come back down to support, which is pretty much $4, just between 4 and 4.10-ish. I did add recently, I think we can make another move to 5, and I think I'm going to be all out. Actually, 4.79 is probably my sell, if I remember, and then 4.99, the usual, 4.98 maybe. And I don't know if I'm going to leave anything just in case it squeezes. It might be worth it, because when you zoom out, you can see that, you know, what's a move to 12? Nothing on the chart. So it could do 100% easily. It's just, yeah, I don't know. It's very small amounts, so I don't really care. I can just leave a little 100 shares here and there as a lottery, because it could double overnight, but it hasn't been doing that for several months, so lost hope a little bit. Finally, Nvidia. I leave this at the end and it's in red because it's the only short I have. These two, like I've said, they're on my watch list. It's just I have a lot of watch lists and sometimes I can't watch everything. That's why I've got them there. So my last stock is Nvidia. Now this one here, I started shorting. I think it was on this, you know, I didn't join the craze straight away. I'm talking about after earnings, it grabs the headlines, I'm watching it, and I know that things can go higher than you think, so I don't join the short straight away. It's just when it started to make new highs, I thought, okay, I think it was around here, 420-ish. I was like, nah, let's start a short, you know, 1 or 2 shares, let's just start, and then let's add to it slowly. And I believe I was in my short, like, I don't know if it's 10 shares or something, but all in before this move up. I remember at this move up, I was like, oh, you know, I'm underwater, and I didn't want to add. I wasn't that worried because I know it's ridiculous, you know, how many times earnings per share times revenue, all these things you would see all over the place. It was ridiculous. You'd know it'd come down, but things can keep going up longer than you think. And then, you know, all of a sudden, the price to hold your short goes up, and there's all these extra squeezy moments. But, you know, I was paying attention. It annoyed me a little bit when it started to get all the way up to 480, because I thought, oh, great, here comes 500. And then, you know, just to get back down to your 430, 420-ish average, whatever it is. Actually, my average now is 40, where it is, 408, 409. And I just covered on Friday my first share, one, because I actually think it's going to go much lower. So I thought, okay, let's just cover 1 share just to say it's done. But you know, when it got to 480, I thought it would do 500. It's just annoying. But very glad that it stopped and then it failed here. And then on this day, closed below the ascending. I knew we were done. Look at this retest of the ascending and then failure. Beautiful. Was there any news, by the way? Was there earnings? I don't even care. I don't even care about the earnings. You can't justify this move. Even if earnings was double what they expected, you have to come back down to reality. And that's what we did. You know, now we've come and tested the ascending. So this close is not beautiful. I'm not going to say it's below the ascending because I might be off by 1 or 2 millimeters, and then that could all of a sudden suggest, no, you're in. I want something obvious, you know, like a close below 400. That means you've lost the ascending, you've lost your psychological level. And that's what I expect. I expect 1 or 2 days where we maybe go sideways, right? Apple, maybe that little support zone, whatever it is. But I could see Nvidia leading the Nasdaq low on Friday, and I felt like it wanted to go lower. Sometimes you can feel it. And I think that's what's going to happen. We'll go to 400, flush it, maybe close above 400, but it's still a red day. 1 or 2 days, maybe retest descending like here, fail to go back inside it, and then ciao, roll over, close below 400, and see you in the 380s, and then let's start filling gaps. And even when you start filling gaps, you're nowhere near where you should be if the market rolls over. So very happy. Started to cover. I'm going to start covering more as we go down. For me, next cover is probably, I think I'm not sure actually. I've got all the good till cancels in my interactive brokers, but I think is this gap fill? I think it's 387, you know, this little zone here, and then whatever, then I machine gun my way further down we go. Maybe just above 380, 1 or 2 shares, then there, and then I want some for the gap fill, and then, you know, 10 shares out. So, but basically I'm pretty much at my average now, maybe just in the money. So yeah, that's it. You know, I got one short, even though I think the market's going down. Otherwise, I have all these other stocks. You know, obviously I've got this gas stock and the oil stock, but otherwise they're all sort of, and then you've got these 3D stocks. But otherwise they're all mainstream, blue chip, large caps, despite these 1 or 2 here. So I'm just trying to build more of a position. So I really don't mind them going lower. I believe in them long term. Some of them are for a quick trade like Paramount and Crispr and even Zoom. But let's just say, even though that's for a quick trade, medium term, I still don't mind adding to them a little bit more. And I think they'll go lower, and that's what I'm waiting for. So that's the rest of the portfolio. Otherwise, they're all gold and silver stocks. So, and a lot of cash on the sidelines. Almost 50% of the portfolio is cash. So I'm very happy holding that, making 5% interest on that whilst the market collapses, and where I can add to more either gold and silver stocks or more of these blue chips. So that's the whole portfolio. That's the strategy, despite the technicals. Anyway, have a very good weekend.